Good morning. Good morning. So it is, 1st of July. How did that happen? Seems to just be happening so quickly, doesn't it? Right. So I am streaming from Ecamm Studio. So there's probably about a 20-30 second lag. So I'm just going to hang on a couple of seconds to make sure that I'm actually streaming and that you can hear me. Let me just pop over into the group. Right, so got a couple of people just popping up now. So I hope you're one of them, Marina, seeing as this is for you. Right, so if you, there should be, when you pop up, a comment that says I'm streaming live, and it asks for you to give me authority to share your name, so that if you do have a comment, then it will pop up in the box. So if you click those buttons, so that if you do want to interact and you do want to say something, then I can see what you're saying. So the objective today is to try and make this as interactive as possible. So this is a fairly complex topic that we're going to have a look at. So I want to make sure that you get the best out of this as you can. Let me just pop. Yep, great. So Marina's here. Fantastic. Let me just move my windows around. So the really nice thing about Ecamm Studio, which is what I'm using, is whilst what you can see on the screen is a series of, you can see what I'm presenting in terms of the Q&A image and my screen. I've got a whole load of windows down the bottom here. I'm just going to move some of them around so that I can see comments, but not on top of the screen that I'm going to talk through. So, who am I, first of all? So, my name is Lisa Dixon. I'm a Chartered Global Management Accountant, Masters in Business Admin, did some marketing stuff and some Prince 2 stuff when I left corporate, because I thought it would be really cool, and if I'm going to learn something, I like to make sure that there's a qualification at the end of it and it keeps me disciplined and focused. So I am the director of Xero on Cloud Accounting, and we have lots of really lovely accounting clients, some pretty big, all growing, all ambitious, all, despite the current economic climate that we're in, most of them are doing really, really well and have managed to maintain. Some have even grown their business, which is really cool. One of the favourite things I've done this year with my clients is written a dividend voucher for £1 million, which was really cool. Not for me, unfortunately, but for one of the clients, but that was quite exciting because obviously we played a part in helping them achieve that. And another client bought their first company car, and it was a Tesla. So he was really excited, and it was, really exciting for us to watch him and help him build the business that grew that. So I also run 2 free Facebook communities. One is for bookkeepers. That's the one that you're in now, where we look at a lot of bookkeeping and we do stuff to help get behind the nitty-gritty of the numbers. So this is more bookkeeping and less on the business side. And then I also run the Bloody Brilliant Business Club, which is kind of a sister Facebook group, where it's less bookkeeping and more about business and profit and growing a business. So one's aimed at bookkeepers, one's aimed at business owners, but obviously there is some overlap, because obviously bookkeepers mostly are business owners, and business owners sometimes do the bookkeeping. So a little bit of overlap, but hopefully not too much. We also have, for people who are not clients, 2 memberships, and one is the Bloody Brilliant Business Bookkeeping Academy. And the reason why I'm doing this live for Marina is because she's part of the academy, and as part of the academy, if there's something that she wants to learn that isn't already in there, I want to make sure that she's getting value for money and that she's learning and doing something different. So this masterclass has come from a request from an academy member who wants to know more about a particular issue that impacts her bookkeeping clients. And I also run another paid membership, which is Profit Hackers, which is taking a far deeper dive into more business, more profit, more cash, more freedom, and getting down to the nitty-gritty of earning profit and making more money. So let's have a look at the question. So the challenge is that the client sells places now on programs that start in the future, and how do we track that income? So I'm going to talk to you about 3 different types of income, because we have this with a couple of our clients. So there are programs such as, there might be a program that might be starting, say, in January 2021, but the sales program for it, the sales supply chain, the pipeline all starts 6 months earlier. So do you increase the work in progress? It's more of a deferred income than a work in progress, depending on what it actually is that you're doing ahead of the time. So the program itself only starts being released in January 2021, but it's sold for the previous 6 months beforehand. So in this example, so that we don't end up with gazillions of journals, I'm going to assume that this is a 3-month VIP coaching program. So then, say we have a second program, which is a rolling program. So people sign up each month, and they maybe stay for 10 months or they stay for a year. So this is quite typical of like a 12-month coaching program. It's a group coaching program. It could be an ongoing coaching program. It could even be a membership. So, but they pay up front for something that they then get delivered over the next 12 months. And then another option, and this is one that we deal with quite a lot with a couple of our big training clients, is one-off courses sold in advance. So these are courses that are sold in say, June, July, August, September, October, November, but might relate to January next year, February next year, March next year. It could be things that we are selling today in July that actually relate to August. So we might be pushing the income forward just for 1 month. So why is it important to track things? Well, our challenge is that we're getting the income in July, August, October, September, November, December, but none of that income relates to stuff we're going to deliver in that month. It all needs to be deferred into January, or the month that the course relates to. And the reason it needs to be deferred, it's partly the accruals concept, partly the matching concept. So if you're familiar with bookkeeping principles, then those should ring a bell to you. We should be reporting income or costs in the month that the activity relates. So say, for example, we sold £10,000 worth of courses in July 2020, but they actually relate to something being delivered in January 2021. You wouldn't want to report the income now in July when the costs are most likely going to be incurred in January. Now, quite often when you've got freelance trainers involved, and the freelance trainers are the ones that are delivering the course that you are providing, the freelancers will invoice you on the 1st of February for stuff they did in January. So you've got all of your income being billed in advance and all of your costs potentially being billed in arrears. So unless we defer the income into January or accrue the cost into January, January could potentially be under provided in terms of both income and cost. So what we need to do is find a way of tracking all of these costs and all of this income and making sure that it's easily accounted for in Xero without having to rely on multiple spreadsheets and trying to create our work in progress calculations behind the scenes. So we do all of this in Xero, and I'm going to talk to you today and show you a little bit about how we do that. So I've got a little process here that I'm going to come back to as we step through it. So we need to go and set up some general ledger account codes, and I like to see each of the sales programs. So say we've got these 3 different coaching programs, I like to see different income accounts for each of those to make sure that we track the income in separate line items. That way it can be budgeted, it can be tracked. If you've got items that are recurring, you can see that that recurring income relating to that particular course type is relatively flat. So you can see that it has been spread equally over X number of months, or that it's perhaps growing if you're taking new people onto coaching programs. Perhaps you've got people that do a 10-month membership and then move into a monthly membership afterwards, which might be a maintenance program. And again, I would track those in different places, in different account codes. So with account codes, when you're looking at management accounting, less is most definitely not more. I would go for more account codes and more detailed tracking, because you can always group the account codes at high level if you need to report, say, to banks or investors and things like that. But when you're managing the detail for your clients or for your own business, you want to make sure you can see the detail behind it. So more is definitely more in this case. We're going to look at setting up tracking codes, and we're going to look at simple date tracking in this format. And we're going to set up invoices because in this example, we're literally going to start from scratch. So we've got no invoices, we've got a raw example demo Xero account. So we're going to do everything from scratch. I'm going to show you how to run P&L reports by tracking codes, and I'm going to show you how we post the deferrals, and I'm going to show you how to do a control report to set up those deferrals, or to check that you've deferred everything that you should have done. So there's two ways. Actually, I'm just going to shrink this a little bit, because there's two ways. I'm going to show you how to post the deferrals. I'm going to show you how to, let's check the spelling on that one, control reports, and I'm going to show you how to check the deferrals, because there's two ways that we do that, one with a control report and one using the balance sheet account. So let me add that in there. Right, so let's pop over into Xero. So the first thing we're going to do is set up some general ledger account codes. So I'm going to go into the chart of accounts. And I can see Tony has joined us. Hi, Tony. Right, so we're going to go into the chart of accounts, and I'm going to go into revenue. And I've got, these are various codes that I've set up for projects before. So I'm going to reuse some of these. So this one, let's go back here. We're going to set up 3-month VIP coaching. So let's change that to, come on, Xero. In fact, no, let's leave that where it is. I'm going to start from scratch and say set up 210. And I'm going to call it sales VIP 3-month program. And that's going to be a revenue account. And if you're VAT registered, that will be VATable. And I don't need to show it on the watch list. I don't need to show it as an expense claim, and I don't want it to behave like a bank account, so I'm not going to enable payments to the accounts. Then I'm going to set up a 211, which is also a revenue account, and I'm going to call this one XYZ rolling program. So let me just copy that over from there. And that's another sales account. 20% VAT for VAT registered. And then let's set up a 212, which is also a revenue account. And this one I'm going to call just courses. So these could be online courses, in-house courses. So actually, let's say they're in-house courses. We're going to go and deliver these to our client at their place of business. So if you had people coming onto online programs, you might want to record those separately. And if you go and deliver programs to your client, you might want to report them as in-house courses. And that way you can track your costs as well against those. So let's save that. We don't want them on dashboard, expense lists or payments again. So that's fine. So I'm going to just copy that. So I've set up my sales accounts. I'm quite happy with those. What I am going to do next, I'm a big fan of deferring costs into separate deferral account codes. So let's have a look. If we are going to take income and we're going to defer it, it's going to be a liability, because if we have to cancel the course, we potentially have to repay the customer. So this is income in advance. So I'm going to leave income in advance there where it is for ad hoc income. I'm going to create 2 more income in advance account codes. So that credit control account, I'm going to move out the way because I don't want it there, so I'm just going to rename that one. And I'm going to add, let's take a copy of that, and I'm going to add an account. It's a current liability, 812, and I'm going to do one for my 3-month VIP, and I'm going to add another account, and this one is going to be for my rolling program. And it just makes, if you separate these things out in the balance sheet, the only person or the only persons it really impacts is you, and it makes checking and finding anomalies a lot easier sometimes. Now, we don't need to charge VAT on these because we're only ever going to journal in and out of these accounts in the balance sheet. Definitely don't need to show them as expense claims or payments on account, so we're just going to put that there. And I'm also going to add a third one, $814, which will also be, let's have, we've got, then we can do 811. And that's income in advance. So income in advance and deferred income is basically the same thing. It's income we've taken before we deliver the program. And that one we're just going to call courses. Again, no VAT because we're only ever going to journal to and from that one. And it's a current liability. Thank you, Xero, for reminding me that I needed to fill that in. Right, there we go. So we've now got 3 income in advances. So if I was reporting that on a balance sheet to the directors, I might group that. In our instances, what our clients like to see how much income they have in the balance sheet that they've taken from things like major projects or coaching programs or an ongoing rolling program. So they like to see by account category how much they've billed but they haven't recognised in their P&L yet, which is why we do it in this way and why we break the income in advance down into different programs. So you don't have to do that. It just helps reporting your balance sheet and what's going on. So let's go down to our checklist, and I'm just going to Control V that, so we've done deferrals. Right, so now I'm going to go and set up some tracking codes. So I'm going to go into the advanced section and look at tracking categories. So I've got 2 tracking categories that I can use. So the way we work this out for some clients is what's most important, what we're trying to measure is the date that this program is going to be delivered. So I'm going to rename this region 1 into delivery date, if I can spell it, delivery date. And for some of our clients, we change, we show both delivery date and the program. So for some of our clients that are delivering major projects, major service schedules, we also track costs and incomes by program, and that way you can see the profitability of each one as it's delivered through the months and its entirety. But for the time being, all I'm going to focus on is delivery date. So I'm literally going to go through and add 12 months worth of items in here. In fact, let me leave that one as it is. Can't remember what it was, but I'm just going to change that to do not use for the time being, because I don't want this to get confused with other tracking codes. So let me add 01 January, add 02 February, so you get the picture, and we put the numbers in and the dates so that it helps it appear in chronological order, because obviously if you did it in alphabetical order it would look silly. April, 04 April, 05 May, 06 for June, Now you can set these up as you go along, but if you know what you're going to use, you might as well do it in one go. Right, so I'm going to save that, and then what I am going to do is I'm going to remove these ones that are in Xero. So I'm going to restore that one. Let's go back on the stage because I want to go back into tracking codes again and get rid of these. And the reason I'm getting rid of these other ones, okay, let's go back one, get back into tracking codes, is because I don't want the reports that I'm going to show you to be impacted by previous Xero demo transactions. And last one, let's get rid of that one for now. Right, so let's go back to our checklist, and we've set up our tracking codes. Now, to show you what we're doing and how this is going to work, we're going to set up some sales invoices. So Bob Builder in June is going to do a 3-month program which starts January 2021. Now, I would always put as much date as possible on the line items so that when you're looking in the account codes to try and see whether things are in the right months or not, all of your data is in the line item without you having to go and look it up somewhere else. So it could be you're doing a 3-month program, and if you just return down here, January 2021 to March 2021. Oh my goodness, can't type properly. And it could be that we're starting one of those, and it might be £1,000, and it is a 3-month program, and the delivery date is going to start in January. Now also, our chappie here, let's copy this down, is going to have another program that runs from April to June. So it might be that, say, Bob is going to go on this one and Wendy is going to go on this one. So she's going to pay a bit more for this one. It's also the VIP program, but she's going to start hers in April. So put as much detail as possible, make sure that you've got your dates in and who they are. So again, it just makes everything a lot easier in terms of tracking. And the delivery date that they're going to start is going to be January. Now, what we then want is, say Bob is also going to do one of our, what other programs have we got? One of our rolling programs. So he's also going to go onto the rolling program. So typically you wouldn't have the same clients doing the same thing, but for the purpose of setting up the invoice and doing the deferrals, I want to show you how this works. So he's also going to have a rolling program, which is 1500, and that is that account code, and that's going to start in July. So we're billing him in June and he's going to start that in July for 10 months. And just because we want to do something that's a bit complete, we're going to do an online course. He's going to do an in-house training program in-house training prog for, I'm going to make this one for Bob and Wendy. And it's going to be delivered, say, in September 2020. So we're going to do a one-off program for £5,000, and we're going to deliver that on site and take that in-house. So that's going to be delivered in September. So let's approve that one. Now, if you had lots of clients, obviously you'd have several of these. Let me copy another one over, and we're going to create it for another client. So let's have Bayside Club. They're going to do something similar. So Bayside Club are going to have 3 people. 2 are going to do it in the January one, and 1 person's going to do the April one. They're going to have 2 people joining the rolling course, and they're also going to go on the September training program. So this will be for say Jim, Rosie, so actually it might be Jim and Jan. Rosie, that's going to be the rolling program. I'm going to have 2 people on it, so Jim and Jan, and then all teams for Bayside are going to have, all team members perhaps that should be, and they're going to pay 7,500 for theirs because they've got more people going on them. So I'm going to approve that one. So I've put 1 invoice into June and 1 invoice into July. So you'd have lots of these coming up, and you'd have lots of invoices, but so long as you track the delivery date when everything's going to start, then it makes the process a lot easier to reconcile. So we have, go down to our checklist. I've set up the invoices so you can see those. Now, if you have ongoing programs and it's using the same text, what you could do is set these up as items. So set the item code up so that you've got standard text. So you have your 3-month program, you have the names, and you have the date that it runs to and from. Then you won't forget next time you raise an invoice which month all of these things relate to. So what's next? So find and recode. So if you're just setting this up for your existing training programs and you haven't got this data tracking in place already, the best tool in Xero that's available to anybody who has advisor level access is the find and recode function. So let's have a look at everybody who's in let's have a look at everybody who's in the 200 sales account code, And what we're looking for here, if you were to find anybody if you invoiced historically that you then need to go back and adjust for, you'd pick them out of here. And so say this Bay West was actually a training course in May, but it wasn't going to be delivered until June. You can then pick that transaction and you can recode it and you can add your delivery date. So say this was actually a training course that was going to be delivered in September again, you could pick out all the ones that are being delivered. And this is where it's really important to have your text clearly identifying what it is, who's going to go there, what month it relates to, because you don't have to then keep opening the invoices up and trying to work out what relates to what. It's all there for you. You keep it in the invoice reference, so that's another really useful place to keep data so that it's easier to track. But use the find and recode function to go back and correctly analyse anybody who you want to start deferring historically. So if you've deferred things before, it makes a real difference, Marina. So Marina said she loves the idea of adding a tracking code for delivery date. Well, it works really, really well. And I'll show you how it works in more detail a bit later. So use the delivery date, go back and change everybody that you might need to be deferring, or if you need to check that your deferrals work historically. If you're implementing a new system, you could just do it from the next month onwards. You don't have to go back and do things. Personally, I'm a bit sort of fastidious about making sure that if I do something part way through a financial year, I go back and I redo everything from the beginning of that financial year. So the whole financial year is consistent. All my control accounts are consistent. All my deferrals are consistent. My way of deferring or accruing or prepaying is consistent. So whatever I implement now, I personally would go back and do it from the beginning of the accounting year. Now, the challenge if you're a bookkeeper is that that's sometimes a lot of effort that you might not be charging for. So then you have to go back and consider, is that something that's going to make your life easier or make sure that you've got better control over what you're doing? So do you suck up the cost and take it yourself, or do you go back to your client and upsell it as an advantage that you found a better way of being able to forecast, being able to manage, being able to demonstrate the deferrals so that they've got better understanding of what's in their P&L and how it relates to each month versus what's in their balance sheet. And if it's broken down by those individual line items, those individual categories, they can see how much of one program versus another is deferred into the balance sheet that in theory, if everything was cancelled, would be refundable to the client. So it's kind of also their exposure. So you have to kind of think of whether you can upsell that as a benefit to the client to encourage them to pay for that time, or you just do it yourself because it's going to make your life easier and it's going to make you more efficient and more able to provide better quality information as a bookkeeper. So, you know, swings and roundabouts. So typically we would go back and redo everything from the beginning of the year, and we probably wouldn't charge for it unless the client has asked for it. If the client has asked for it, of course, that's an easy upsell. Huge amount of work potentially depending on the number of transactions, but it really works. So let's go back and look at our list. We've done the find and recode, so I'm going to tick that one off. Now let's have a look at our profit and loss accounts. So I'm going to run a P&L. Now Xero has two types of P&L format. This is the new format, which I really don't like at all. So I'm going to go back. This one hopefully is the old format. I personally find this a whole lot cleaner, and I much prefer to be looking at this form of P&L rather than the historic one. So I've got cool stuff in there, I've got in-house courses, and I've got online courses. But we know that we haven't really sold £11,000 worth of stuff that relates to July or to June. So we're going to have to go back and try and figure out what month they relate to. So this is where we start to look at the P&L by delivery date. So what we know here, this is looking at all delivery dates from 1st of April 2020 to 31st of July 2020. Now this isn't a particularly helpful version of the report because in here, it's kind of useful, but it's not. It will have invoices from different time periods. So if you're looking at data from one month to the next, or you want to see the historic transactions, then you can pick, let's go back to the P&L, you can pick the delivery dates based on the information provided in this report. So remember that Xero's default is always going to be current month plus 3 periods. For doing your management accounts and doing your journal adjustments, you want to look at this compare periods. So we started our journals in June. So all I'm interested in is the June month for 1 month, comparing to nothing previously. I'm not interested in budgets at the moment. And what I'm interested in is this one here. I want to see all delivery dates. So if I update this, this is my monthly management accounts, but you can see that I've got some income in here that relates to January, some that relates to April, some that relates to July, and some that relates to September. So now I can start going in and working out what my deferrals are. And this is where it's really important that you get this data right and you use the tracking codes. So we've got £9,000, £4,000 here that's been billed in September or been billed in June, but relates to September. So I'm just going to open this in a new tab. And also in another new tab, I'm going to open a journal. So I'm going to start a new journal and I'm going to defer or prepay. Now, so typically what I do is I set up some standard journals. So we're deferring in-house courses, defer income that relates to in-house courses. And these were billed in June relating to September. Now, for our clients, we do these deferrals by invoice. And the reason we do them by invoice is because many of our clients have different programs, and these programs are all worth sort of £40,000-50,000 worth at a time. So they're sizable transactions. They're sold in advance and all the costs come in arrears. So we will be deferring the income into the right month and we'll be prepaying the costs. So as well as having a delivery date, we have a program code so that we can track the program overall and the delivery date overall. So we use the delivery dates to make sure we've got the costs in the right months, and I use the program code to check whether the program itself is profitable. So have a think about how that works. So in this instance, all I'm going to put, I am going to refer to invoice 47 for Bob, which is Bob Builder, and that reference there becomes my unique reference for this journal. So if I want to trace any journals that relate to that invoice, I can search for those. And I want to take the income out of June and I want to put it in September, 1st of the 9th, 2020. So I would take it out at the end of the month and I would put it in at the beginning of the month, regardless of the date that the course was going to be delivered. You can change the dates to the delivery dates of the course, but I think that's enough. So default the narration to journal line description and always uncheck show journal on cash basis reports. There are very few journals that you need to tick this box that will relate to, that will actually impact cash basis reports. But if you use cash basis reports and you tick this box, your journals will screw your reports up. So always untick that box. Now I'm deferring out of account code 212 and I'm putting my income into one of these 8.1 accounts. So remember earlier on I looked at the account code and made sure that they were 8.1, 8.12 and 8.13 so that they were all consistent. That allows me to then bring up the account codes and make sure that I'm putting this in the right bucket. So this belongs in the courses income in advance bucket. This is September's income, because I'm focused on the delivery date, not the invoice date. And I had a credit of 41667. So I need to debit 4166.67. So I'm going to post this journal, and what I'm doing is I'm pushing the income out of my P&L in June and I'm bringing it back in September. Now, we also make sure that all of our journals reverse at the time we post the journal, so that we do the whole of the journal transaction in one go. We don't come back and do it later. And that's another reason why we would never have work in progress spreadsheets. So let me post that one. Now I'm going to go back here, update this, because what I'm expecting to see is that my debit is offset by my credit, so I should have a nil balance in June, and that's one of my controls to make sure that I've done the right thing. Then I'm going to update this report, and I should have nothing showing in here for September. And because the sale wasn't billed in June, or doesn't relate to June, I don't have to worry about that. So I mean, this is the existing Xero transaction that was there before, so this is another kind of sale, and this is part of June's income, so that's fine. Now I've got some July income, which is my rolling program. So let's have a look. My rolling program, I'm going to take my original journal. I'm going to copy that because it's just quicker. Right, so let's open that in a new tab. There we go. So I'll get rid of that one. Get things in order. I've got a rolling program. Now my rolling program is slightly different because this is going to be billed in, this is a June program, but it's going to start in July. So now I've got a slightly different aspect to consider. So do I defer everything back? And I'm going to show you how we do this in just one moment. We need to postpone this, or we need to defer this, but it doesn't belong to July, it belongs to the next 10 months. So what I'm going to do is I'm going to defer the rolling program. Now here, it doesn't matter how many sales I made, whether this is 1 sales or 100 sales. Rolling program. What matters is that this is billed in, I'm going to take that off. So this is July sales. That was June sales actually, wasn't it? So I might have, let's have RP June. So rolling program June 20. So that's my journal reference that if I needed to search on it that I could do later. Billed in June, but this might relate, say, I'm just going to do a 6-month one for the sake of doing the journals. So it relates to July 2020 to December 2020. So I'm going to post 6 journals, not 12. Now, this is where you can start getting a little bit more clever. So I'm going to copy this down over here because I've copied the journal. And I need to make sure I take it out of 211. And it relates to 813, which is my rolling program. So looking at my tracking options, the 9th of September or the 7th of July doesn't really fit this. So I'm going to set up a new tracking option and I'm going to call it the 7th of July 2020. So let me add, in fact I'm going to call it 7th of July 6 month. I'm going to save that. Now I'm going to take out 1250, and I'm going to use that one, and I'm going to take out 1250, and that's going out on the 30th of the 6th, 2020. So let me post this one. Now I'm going to bring this back. I need to reverse this in the sixths. So that'll be my 1250, divide that by 6, divide that by 6, and I'm going to bring it back on the 1st of the 7th, 2020. So I'm going to post that one. Then I'm going to view my journal, and I'm going to copy it 5 more times, and then I'm going to add the 1st of the 8th. So you always have them coming back in the 1st of the month so that they appear immediately. And the 1st of the 9th. So by 1st of 9, 2020. And the 1st of the 10th, 2020. And the 1st of the 11th, 2020. And the 1st of the 12th, 2020. Now, 203.33 times 6 equals 1219. Let's go back and have a look at that one. 208.33, 208.33 times 6 equals 1249.98. So I'm 2 pence out on my reversals, but I'm going to leave that for now because that's important later on when we start tracking. So let's just go back there, close some of these journals. And if I update this, so I always open multiple journals, multiple screens, and then as I go back, I check that this works correctly. So I should have filter by 07 and filter by that one. So I've got 1250 coming in and 1250 going out. Now what I might do, actually, this is one way of doing it. When we did the original journal, we reversed all of this out of the P&L using the 07 6 months, but actually I think I'd prefer it to be that 07, and again I'll show you why this should be different in just a second. So if I go back to my control, which is my sales account, let's get rid of that one, there we go. So that's my control, that everything that came in was deferred. And if I go and refresh this one again, so I'm going back and I'm checking every time I do a journal that everything's appearing as it should do. So now I've got a 3-month program to defer. In fact, I've got 2 3-month programs to defer because one starts in January and one starts in April. So let's take a look at each of those. I'm going to move them to the other side of my journal screen so that I can work backwards again afterwards. And I've got a new journal. Now, Bob the Builder is starting a 3-month program, so I need to defer that income till January. So I am deferring 3-month coaching program which relates to invoice 47, which is Bob Builder BUI, and it was billed in June but relates to January. (2021). So we're going to take it out of June 2020. We're going to bring it back. Well, there's two ways of doing this. So let's look at this coaching program. So 30th of June into 10. So we're going to take it out of 210. And we are going to put it in one of our 8.1 accounts, and it's this coaching. So the delivery date will be January, and here the delivery date will be January. Right, now, so we've definitely got 833.33 to take out, and we know that from this transaction here. We need to remove this from June's P&L and put it into January's P&L. So there's two ways of doing it. You can take the whole lot out of here. So take the whole lot of 833 out and 833.33 out, and then reverse the whole lot on the 1st of January. And you can do this in one transaction. And the reason that we do it this way is because our client sometimes changes the delivery dates of their program. So people might build up and be expecting to start a program in January. Something happens, like, you know, an event gets cancelled, people drop out, trainers are sick, something happens before then, so it's pushed out a month. So rather than writing out the journal now and then deferring it across January, February, March, what we often do is just defer the whole of the income out now in June, write the whole lot back in January, and then when we get to January's accounts and we start to look at when the program's actually going to be delivered. So sometimes a 3-month program that you think is going to happen in January, something changes, it might go over to 4 months, or it might start in February. So rather than doing all the spreading now, we leave the spreading until we get to January. So that's what I'm going to do in this instance. I'm going to move everything out that relates to January and push it out there. And you'll see that that should have been 2021. So Xero's already picked that up, thankfully. And then I'm going to go back and I'm going to update this. So my income is in and out, that's good. And I need to do this one. So because this is virtually the same, I'm going to take my manual journal that I posted before. I'm going to copy that. And this is deferring a 3-month coaching program. This one, I'll close that one because I've done that one. It is for Wendy, still Bob Builder, invoice 47 again. Relates to, this one relates to April 2021. So that should be 04, and that should be 04. And I need to copy this text down because I've changed this. So let's just do that very quickly. And the VIP program and the income advance for the 3 VIP programs stays the same, but my value needs to change because this is £1,000, the 30th of the 6th, 2020. I'm going to reverse it on the 1st of the 4th, 2021. And change that to 1,000. I'm going to post that. So then I'm going to go back, just double check on my controls that I've picked up the right accounts and everything equals 0. So that June income is now being pushed forward to next year, which is fine. And I'm going to update this one so you can see that now I've got no income in June that relates to a future month. So that's control number 2 that's completed. Now what I would do if this were a normal client, I'd be looking at anything in the unassigned bucket. So say, for example, we've raised invoices for future months, but they haven't decided which cohort they're going to go to onto, which training program they're going to go onto. So we might have raised a sales invoice for something that's going to happen in months to come, but they don't know what time that's going to be. So perhaps we go and have a look at this one, finding your brand, and actually the delivery date of this, I'm just going to edit that to June because that is a current month. So we invoice them in June and it relates to June. Now for our training organisations, we always make sure there is a delivery date in every transaction. So I'm just going to have a quick look at this one and let's go and have a look at that invoice. Yeah, so what we would do if this were one of our normal clients, we would be making sure that all of our incomes, all of our invoices had a delivery date on. And what you expect to see when you run a profit and loss account, let's close that one, update that one. What you would expect to see is only income that impacts the June period. So of course this is using different tracking categories because these are Xero test transactions. So I'm just bringing them all in line to show you what the P&L should look like. So I'm changing that to June. I'm going to update that. And of course I could have done this by find and recode. There we go. So what I should have in June's P&L is only income that relates to June. So that's the control that I've deferred everything that I ought to have done. Now, of course, I could have put the wrong month codes in there. That's something else that we have to look at separately. But assuming I've put all the right monthly account codes in and I've got nothing unassigned, then I've made one of my controls is that nothing that is billed in June that doesn't relate to June is in that profit and loss account. So now we've done June, let's pop over to July and we'll do the same there. So it's really, the tracking codes in Xero really help when you've got income that's billed in all these different periods. So here we've got the same sort of impact. We've got 6,250 that was billed in September, that billed in July but relates to September, that was billed in July but relates to January. So I'm just going to quickly pop this over and go and defer all of this income. So let's go and find my journals. Right, so coaching program. Have I got a coaching program in there? Yeah, I've got a coaching program. So I'm going to copy this journal. Stick that at the end there because I like to work in. So 3-month coaching program. This invoice was to Bayside and it was invoice number 48. 48 to Bayside. Billed in July 2020 but relates to September. In fact, this isn't a 3-month coaching program, this is an in-house course. Relates to September 2020. So once you get the hang of this, after you've done it for a couple of months, it all starts to make sense. Let's have an eye. There we go. Right, so Marina needs to leave, that's fine. I will finish this and you can watch the replay later. So going to September, and this is, sales are going to be 210, 212, 81, and we are going to defer 6250. So I'm going to show you, I'm going to run through each of these for 2 months just so that you've got some things to look at, and I'm going to take them out on 31st of July. 2020 and put it in on the 1st of the 9th 2020. And if I update that, that should be nil. Great, so that's my control that's working. Go back to my P&L, update that, so this September should disappear. And I'm going to do these two. So let's just take that journal and copy that. And this time I'm deferring 3-month program. It will be in here, Eunice. So deferring a 3-month program. Invoice number 48. 48 to Bayside. Billed in July, relates to September. No, it relates to January, in fact. Billed in July relates to January 2021. So you go through each of these steps. Okay, copy that, copy that, copy that, and I need to go from account to 10. So because that's a 3-month program, I'm going to use 812. Starts in January, and we're taking out 166767, 1667.67, 1667.67. And it's going out on the 31st of the 7th 2020 and 1st of the 1st 2021. So I'm just going to double check that. So 3-month program, billed in July, relates to January for £1,600. 3-month program, billed in July, relates to January for £1,600. So let's post that one. I'm going to update that one. There we go. Now, if you've got a difference, then you can see that the difference is picked up in your control. So that's your third control. If something that you post doesn't quite reconcile, say you transpose a number. So you can right click on here and open the journal. Open the auto reverse journal so that you're editing both of them, and then edit. And let's change that to 1666. 1666. And post. Yeah, exactly, Marina. So all of the information is in Xero, and it makes it a whole lot easier. You can look at it wherever you are. You can run reports on it. And I'm going to show you how to build a control report. Let's post that one. Yes, somebody who came and looked at your spreadsheet later on wouldn't necessarily understand how you've calculated it. Exactly. Now, it's really important, and again, going back to the whole point of transparency, that's why it's really important to put, you're deferring the 3-month program, who it relates to, you defer it from 1 month, it relates to such and such month. So you put all of your detail in your journals. So it's a bit more time consuming, but if somebody comes to look at it later, including you, if you can't remember what you were doing, or say the program moves, what happens in our world is sometimes we defer a program, and we've deferred everything till January 2021. In 2021, perhaps the client itself might have changed the deadlines, or they've deferred the course again. It might go into February. So it's a lot easier then to track what you've done and to keep record, because you're always doing it every month as you go forward. So I'm going to update this one. So this is the one I haven't done. I need to do another 3-month program for Rosie. I can cancel that one. So because this is a 3-month program, I'm going to copy this one and step by step I'm simply moving out each of these transactions that don't belong in my July profit and loss account. So I'm looking at July P&L. The April one doesn't belong in here, but these two do. So let's have one more journal to get rid of this £1,000 3-month program. So it's a 3-month program. This is invoice 48 for Bayside. So obviously your journals will have a bit more detail on because you'll have more transactions, and this one relates to Rosie. That's going to be April 2021. So I'm just going to take that and copy that over there. The more detail, the better. These two programs aren't going to change, but that's going to change, and that's going to change to April. Now, the reason we use 04 April and we don't use 04 April 2020 is because we're only ever looking forward 12 months at the most. So you can use those same dates over and over again each month. And that's £1,000 this time, if I remember rightly. So we're going to take them out of July and put them into April next year. So I'm just going to go back and double check that 3-month program, invoice 48, going to April for £1,000. So a 3-month program, billed in July, going out to April, and it's for £1,000. So we double checked that. So the way to make sure that you don't have to go back and redo any journals is check, 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 keep checking. And we go back through the screens, just double checking using our controls. That one works. And then we're going to update the P&L. So we're in July, and the only thing that relates to July is our £2,500 rolling programme and £208 from our 6-month programme. So let's have a look at this one and see what's in here. Now we've got a rolling programme for Jim and Jan that needs to be deferred. So again, we've got 2,500 that was billed and deferred into that 1 month. So I'm just going to go back there, and then I'm going to copy basically that same journal that we copied before, which is deferring £2,500 worth of income out of July. Now what I would typically do, I go back and create, and I'm going to do this as a new journal, untick my journal there, my cash basis. So I'm deferring rolling program income. It was invoice. If this was made up of say 10 different invoices that all started in one go, I'd probably just defer the entire account balance. But because this is one invoice, I'm going to do it on this invoice basis. So invoice 48, so it could have been just the July cohort. So invoice 48 for Rosie, for Bayside, I think it was. Bayside. So this is billed in July, but relates to July 2020 to December 2020. Now, spell deferring correctly. Let's copy that into there. So this is our rolling program, which is 211, and it's going to be one of our 8 ones, so it's this one. Now, the delivery date, the course starts in July, so I'm going to take it out in July, but I'm going to bring it back in July over 6 months, and this will make sense in a moment. So 2,500, let's just make that 07 for the time being, and it's going to be a debit, of course, because we are reversing deferring income. It's going to go out on 31st of the 7th 2020 which is a future date, but imagine this was month end. And now I'm going to reverse it back using the 6-month code. So 31st of 7th 2020, and it's going to be 1/6 of that. Divided by 6. And I'm going to post that. And then I'm going to copy this 5 more times. 1, 2, 3, 4, 5. And I'm going to post one on the 1st of August. I'm going to post 2 on the 1st of September. And 1 in October. 1 in November. 1st of November. Remembering to keep your dates absolutely spot on in terms of format. And making sure you haven't ticked the cash basis on the report. So let's give Xero a minute to refresh these. Once these journals have posted, I'm just going to go and delete these screens. Now, sometimes when you post in multiple journals and you're quite quick to close the pages, Xero takes a little while to post some of these. So again, what I would normally do is I would calculate how the roundings on the journals are different for the 6th month or the last month of a journal, but I'm not going to in this instance because I want to show you this in the control reports. So I've got nothing in my rolling program for July. Well, I have, but not in that category, not with that tracking code. So the reality is that I should have, for July tracking programs, I shouldn't have any July income, because that all relates to future months, or it all relates to, it should be spread across future months. So all of my income that relates to July is in this 6-month deferred income category. So if I look at that, there should be 2 programs. There we go. So I've got reversal of rolling income for the rolling program that relates to Bob Builder, and the second one that relates to Bayside. Now it could be that if you have 4 or 5 people joining each month, that all you do is defer the total income that comes in for the month. So this might relate to, income billed in January, income billed in February, income billed in March, etc. So depending on how you like to track it, whether you like to see it by line item, by customer, or by individual transaction, can determine how you build these journals. But the point is that you would only expect to see in this tracking date 6-month deferred, or 1/6 of your 6 monthly deferred income. You wouldn't want to see the whole total of it. So that's a lot easier to see when you're looking at a P&L by tracking code, whereas if we went back to our normal format, our common format P&L, let's look at the current and last 3 months, you can't tell from here whether you've done your journals or not, and whether they're in the right places or not. Now, what happens in our world is we have clients who costs are constantly changing. So we have quite a few suppliers, the freelancers who deliver the training courses. Some of them are quite busy, so they might do their invoicing 2 or 3 weeks after the course has taken place. So by trying to track by income and trying to keep those tracking dates in, we can see who's billed what and when they billed it, and then it helps us make sure that all the cost is in all the right place. So let me just go back here. So I've shown you how to create the tracking codes. I've shown you how to do the deferrals. Now, when you're creating deferrals or work in progress, one of the biggest challenges if you're doing this on a monthly basis is trying to reconcile your control accounts in your balance sheet. And for that reason, we always defer everything and post it all back all in one go. Now, the reason why we do that, if I open a new balance sheet, open a new report, so I'm going to go into the balance sheet, and I should have 3 different lots of income in advance. Now, first of all, I'm going to change my layout and I'm going to group my income in advance. So let's do that very quickly. I'm going to group that and I'm going to call that income in advance. Incomes in advance. And I'm going to put that in our current liability, and I'll need to update this master balance sheet, make that the default for all users so the client can see the same thing. Now, what I'm interested in is that at this point in time, if I compare this to the previous month, this is where the value comes into your client. So the value is that at the end of June, we know we've got £7,250 worth of income that we've deferred into our balance sheet. So it's a liability, because if all of those courses were cancelled in the future, or all of these courses, now £18,000 worth by the end of July, were cancelled in the future, this is our potential exposure. So unless we've got no refund cancellation clauses in our contracts, we potentially might have to refund £18,000 worth of cash. So you want to make sure that sort of cash is ring-fenced or protected somehow, so that if you did have a client asking for a refund, you know you've got the cash to be able to fund that. So that's one of the reasons that this will help you. So we always group together income in advance. We also have income in advance showing on our watch list so the client can see that. The watch list, of course, won't group these transactions. That's what you do in the balance sheet, and you do that by making sure you've got a custom report. Now, how this works for us going forward, let's open these. I know that all of this income relates to the next 12 months. So if I extend this report and looked at this, say, to July 2021, my control that all of my transactions are written back correctly into the balance sheet is that this account in 1 year's time or 2 years' time or 3 years' time, depending on how long forward you defer your income for, is 0. So we have, here at Xero, we do exactly the same thing for accruals, for prepayments, for deferrals. We put the entirety of the transaction in at the point the original transaction was entered. So if we've got something that's deferred over 36 months, for example, we defer everything or prepay everything that month that the invoice came in. And we do that so that we can double check that our control account in our balance sheet ultimately always equals 0. So I'm just going to check each one of these. 2021. So that one equals 0. So I can easily see that, you know, this bill side income billed in 2020 relates to September 20, and you can see my September 2020 invoice being or journal being reversed here. So with 2 or 3 transactions like this, it's really easy to see that these controls are working. Now, if I go back a month, because of course one of our journals relates here, we can see this is our control that our income matches our journal. Now, let's go back a month in this one. So we should have exactly the same thing, where all of these, if I go out to 2021, my ultimate control is that this account matches to 0. Now, I was expecting there to be some rounding differences, and but there won't, because I used 2 accounts that offset each other. That's typical, isn't it? So if there are any rounding differences, you'll be able to see that here. So say 208 times 0.33 multiplied by 6 months didn't quite match my invoice. In fact, the actual invoice will be, one of these will be overstated by 2 pence, one of these will be understated by 2 pence, I suspect, because of the nature of these values. So what you want to make sure is that you've got controls in place, and then if you have, say, let's have a look, 208.33 times 6 is 1249.98. So that should really be 208.35, and that should probably be 416.64. So you can use these checks to make sure that your control accounts are reconciled and that they match, and that you've got transactions for August, September, October, November and December. Now, another way to check that your journals are all in the right place, so say I go back to my journal entries, which I might have closed, so let's just go back and find journals again. So one of the reasons why we use references, specific references in our journals, is so that we can then track them if we need to. So if I search for RP June 20, RP June 20, you can see normally RP June 20, RP June 20. There you go. Needs to have it's case sensitive. So this is a really good way of double checking that you've got your journal in June, and then you've got one in July, August, September, October, November, December. So many times you might think that it's more efficient to take out just the 11 months worth of information, the 11 months worth of cost that doesn't relate to that month. What I prefer to do is take out the whole balance and then reverse back the equal monthly instalment. So if this were actually June that it relates to, I would have 30th of June being the whole month value coming out, or whole 6 month value coming out, and then the 30th of June would be a 6th coming back in, and it just helps you confirm that your total balance is correct. So you can easily check that 1250 divided by 6 equals 208.33, whereas if you had to calculate it on a days in month, or 11 months worth that you were deferring, it's a little more complicated, whereas this is nice and tidy and clean. So that's a second way of checking that your journals are of the right value. Right, so let's just go back to our checking. Showed you how to use the balance sheet. Now the last thing I want to show you, so we're happy with our P&L reporting. We know we're always going to look at current period, and we're going to look at, let's have a look at delivery dates. So if I update that one, I'm just going to go ahead to January 2021 now and update that. So in January, I know that I've got sales of my VIP income coming in, and then in January, if we know that it's being delivered over January, February, March, I'd defer that again over a January 2021 3-month course code, and it just makes it all nice and clean so you can see exactly what's in there. Now, one other clever little tool that I'm going to show you how to do. Let's get rid of Google, we don't need you. I'm going to do account transactions and custom reports. I'm going to pick all of my income accounts, which are, or all of my income accounts where we've got deferrals going on, and I'm going to pick all of my deferrals. Now I'm going to take this out to the 31st of December 2021, because this is a long-term report. All right, and what this should show me is all of the transactions in each of the account codes. So that's not particularly helpful in that format. It is if you're checking stuff. It's not if you want to check that your deferrals all match. What I actually want is to group by, there we go, delivery date. Now if I group by delivery date, this allows me to check that my deferrals all reconcile. Now I need to go back a month because I've got transactions in June that defer. Right, I don't need the VAT. Okay, this is a proof of the pudding now, isn't it? And I don't need, I need my debits, I need my credits. I don't need the gross. And I don't want to see I don't need the gross, so I'm taking off some of the columns. Now what I'm trying to build is a report that allows us to check all of the deferrals that we've got in each month. Right, so what I need to do is take off receivable invoices because they are double counting. So I need to go back to my report settings and I need to add a filter so that if I pick up source, I'm only looking at manual journals. There we go. So if I create a custom report where I'm grouping by delivery date, because that's what I'm filtering on, what should happen is that my journals my debits should all match my credits. So this is a double check that I've got the transactions right. So here I've got an income deferred July to December 2020. Right, so I need to go back and check that one. So I'm missing something there. New journal. Oh, it's because we haven't reversed that one. So actually, let's go back, and what I want to do is pick up, I want to group by delivery date, I want to group by journal really. No, by delivery date will work. So what this allows you to do is to double check that everything that you've deferred out of one month, you've deferred into the right month. So these are quite handy reports. Now in this month, let's just double check this one. So we deferred this journal out into from July 2020, December 2020 deferred income rolling program. Yeah, so we haven't spread this over the 3 months yet. In fact, what we should find is that this 3,750 is offset by an equal balance there. There we go. So this control account here, we've got slightly too much in July and slightly less, same amount less here. So this is where what we probably need to do is take that journal and change that back to the 7th of July. There we go. And what we're double checking is that all of the amounts that we've prepaid, we've deferred. So if, for example, you do find there are rounding differences and, you know, say you've got a journal for £9,000 or £900 and you've reversed back 899, you'll see the difference in the roundings here in the balances. So this is just double checking that what you've deferred out defers back. So it's doing the same kind of job as just checking the overall deferrals account, but whereas the overall deferrals account will show you the total of your transactions, all of the things that you've deferred, if you've got a rounding difference or you've got a difference between one of those account codes, looking at things this way will tell you which month they relate to or which set of journals that difference relate to. So that is a really handy report, and what we do is we save that as a custom report and we call it deferrals check. We make that, and you probably don't want to make that as the custom report for that. We save that. That will be, go back into our reports. That'll be saved as a custom report, and then we're going to flag that as a favourite so that when we drop down here, our deferrals check is shortcutted so we can go and check that whenever we want to. So let's go back here, and I've just shown you how to build the deferrals report. So a fairly intensive 90 minutes there, showing you how to do deferrals, how to set up the general account codes, how to set up your tracking codes, set up your invoices, and you can build your entire audit trail for deferring complicated future dated transactions in Xero. So if you've got any questions or any queries, do drop me a note in the bottom. This is quite an intense, quite full-on training. I want to thank you for joining me today. Let me know if you've got any questions, and this is typical of the kind of resource that we publish in our Xero Bookkeeping Academy. So this is our paid membership for bookkeepers, and in there are many courses, mini courses on how to do bookkeeping, how to do deferrals and prepayments, accounting principles, how to build more profit into your business, all sorts. So if you are interested in getting more involved in what we're doing and learning more so that you can earn more as a bookkeeper or earn more by having a more robust financially controlled business, then do take a look at www.xero.co.uk/academy. And thank you again for joining me today. Bye for now.